What's going on, you guys? Today, I'm going to be talking about a conversation that I had with a new client, and we were talking about portfolio allocation and management, okay, during the consultation, all right? A lot of people are confused about how to allocate properly into the crypto market and how to risk adjust and risk assess with all of their positions and all their plays, all right? We're going to get into that concept right now, and we're going to talk about a little bit of the conversation that we had, not as much detail as the call, but I'm going to talk about a concept, and I'm going to give you guys a little bit of game in the crypto market about what to do and how to allocate properly. Okay, how to allocate properly. So we're going to talk about risk management, how to risk manage, the difference between high risk and low risk, and how to actually implement that into your portfolio. Okay, we're going to talk about all that. But before I do, I need to let you guys know that nothing in this video is financial advice. I'm not your financial advisor. I'm not your financial counselor. What you decide to do with your money is up to you, and you need to take responsibility for your buys and your sells. Okay, now let's get into the content. So the conversation started with, he was telling me a little bit about his history with crypto, some of the mistakes that he's made, some of the things that he's done well, some of the things that he's done not so well, and his experience with meme coins. Okay, the guy invested a lot into meme coins. He over allocated a lot of his money into memes. All right, excuse me. And essentially, what he did was he essentially did not risk manage properly. Okay, he didn't put meme coins in its proper context, like I talk about in my videos. All right, if you guys have not watched the meme coins, the good, the bad, the ugly video, I highly recommend you guys watch that video for the context of this, okay? And I was talking to him, and he said that he put a decent amount of his portfolio into meme coins, the amount that he originally started with in the crypto market, and basically it didn't work out for him like it normally doesn't for new people coming into the crypto market, and he lost money. Okay, he lost a decent amount of money because he didn't risk manage properly. Okay, and what I was telling him was the problem with what you're doing is that, first of all, you're new, you're going into plays that you're not really familiar with, or you don't have a competitive advantage with, and then on top of that, you don't have enough money into the blue chip assets that we talk about on the channel. What are the blue chip assets? These are assets that you could buy long term, you could forget about them, and you can come back and they'll still be here, and they've established themselves and they've proven themselves from an investor's point of view. What are these coins? Right now it's Bitcoin, Ethereum, Solana. All right, if you're an XRP guy, I'm not gonna no hate on XRP. If you would prefer XRP, you could do that if you have conviction in that asset and you've done research, okay? But for the most part, those are the blue chips, guys. Those are the blue chip assets, all right? And the problem that this brother ran into was that he didn't have any of the blue chips, so he didn't have a foundation for his portfolio, and he invested a lot into high-risk stuff, and the high-risk stuff didn't work out, okay? So I want to talk to you guys about the difference between, or I should say the balance between investing in blue chip assets versus high-risk assets, okay? The blue chip assets should be the foundation of your portfolio. It should be the majority of your portfolio, okay? And you know, a lot of people make this mistake in the crypto market where they try to cut corners. They try to get rich quick, and they do that by putting in high risk. They do it by putting into high risk coins or high risk tokens, and then it ends up biting them because they're not consistent. They're not paying attention to it. They don't even understand what they're looking at. Then they lose their money, and then they leave the crypto market, and they don't continue to allocate into the market. They don't create a DCA strategy. They don't commit, and this is the problem, okay? So I need to let you guys know that, you know, blue chip balancing is very, very important. Putting high risk and low risk stuff into context is very important. The majority of your guys' portfolio should be in blue chips or things that you have conviction in long term. All right. Now, I'm not saying that you can't take any high risk plays. I'm not saying that you can't trade meme coins. I'm not saying that. I'm not saying that. Okay. I'm not saying that. What I'm saying is that you need to allocate. You need to put those coins in their proper context, and you need to allocate your portfolio accordingly, okay? So high risk plays, think about it like this before I get into that. Think about it like this. if you have a $10,000 portfolio as an example, okay, and you have half of that into a high risk meme coin, and then you lose all your money into that high risk meme coin, that's a significant loss. All right, that's half of your money, that's half of your crypto portfolio, and you lost half of it because you put it into a high risk meme coin. Whereas now if it goes the other way and you put 5,000 into it and let's say it 10x's fairly quickly, then you just made 50 G's, you made 50 racks, you're super happy, right? But the majority of the time, that doesn't work out. It doesn't usually work out like that, because the more, if you over allocate into a coin, typically you're going to overthink, you're going to panic, you're not going to be clear, you're not going to put everything, you're not going to be logical when you make decisions in the market, which means that you're probably going to screw up, which means that you're probably going to lose money from that position, okay? Now let's take another example. Let's take an example of somebody who puts meme coins in their proper context and puts meme coins and adjusts it accordingly in the portfolio, okay? Now let's say you have a guy that has a $10,000 portfolio, but instead of putting half of his portfolio in, he puts 100, 150, 200 bucks into that meme coin play, right? Into that meme coin play. Is he going to care if that coin goes to zero? Honestly. And he has blue chip assets. He has Solana, he has Ethereum, he has Bitcoin that he has conviction and he knows it's going up in the long term. Not really, right? If you do, that's great. Especially if he understands the risk that he's taking with these meme coins, okay? He's not going to care as much because he only has 100 bucks, 200 bucks in it. Now, if it 10x's and it turns into 1,000 bucks or 2,000 bucks, that's fantastic. That's still a fantastic that's still a fantastic win in the market. But he might not get as many gains. But the thing is that he's risk adjusting properly. He doesn't have to overly stress about it when he makes decisions with the buys and the sells. He can be more logical. He can think, and your success rate is going to be a lot higher when you do that. Okay. So what does this look like? All right. I've talked about this in other videos. I talked about meme coins. I talked about how a lack of risk management creates a lot of frustration for a lot of people in the market, and also a loss of a lot of money as well. All right. So you guys need to balance high risk versus blue chips. You guys need to understand the differences, and you guys need to take action in your portfolio when it comes to that and rebalance. Okay. You guys need to rebalance your portfolios and put everything in its proper context. All right. Bitcoin, Ethereum, Solana should be, for most of you guys, more than 50% of your portfolio. Okay. It should probably be 70, 80% when you guys are first starting out in the market, right? Most of you guys, as you guys are learning, you guys are becoming familiar, you guys get a DCA schedule going, you guys should definitely be allocating mostly into safer assets, all right? Mostly into safer assets. The meme coins, you know, if it's Pepe or Doge or something that's pretty established in the crypto market, fair enough. All right. That can be one of your altcoin positions in the portfolio, but even that shouldn't be anywhere close to 25%, 20% of your portfolio. That's only one altcoin, right? Right. So a lot of the time, you guys should be putting no more than 5% of your portfolio into one coin, no matter, you know, if you have conviction or not. If it's not a blue chip asset, you guys should not be allocating more than 5%, right? Not financial advice, but if you guys want to put everything in its proper context, you guys need to do that accordingly, okay? So in these high risk meme coin plays that haven't proven themselves, they're not established meme coins like Dogecoin, Pepe, and things like this, you guys should not be putting more than 1% to 2% of your portfolio in, all right? 1% to 2%. Let's say that you have if you have a $100,000 portfolio as an example, you know, you could throw $1,000 into a meme coin that's a little bit higher risk, that's new, that came out, that you think will do well, if you're equipped, right? If you guys are not equipped, you guys don't know how to chart, you guys can't follow on chain, you guys are not trading, you guys should probably just stay away from meme coins, a lot of you guys, okay? A lot of you guys probably should just stay away from meme coins until you develop the skills in order to play that game, because you have to understand the competitors that you're playing against, okay? And those guys do know how to do that, and they're equipped, okay? So that's just some things to keep in mind, okay? There should be no more than 1% to 2% of your portfolio into any high risk play, period, okay? I'm not saying you can't set aside a little bit of money to have fun and move around with meme coins, but you have to put them into their proper context, okay? Now, what does that look like, right? We're talking about the solutions, right? He's looking into meme coins now The client was asking me if he should be investing into meme coins now, and I said no. I said you shouldn't be. The reason why is because nothing is going to come alive. The meme coins are not going to come alive until the blue chips start to rally. Okay, I think the brother was talking about Solana meme coins specifically. All right, if you guys are going to invest any money into meme coins this cycle, and you guys are just getting into the market now, you guys should probably not touch high risk stuff until you start to see Solana get above $200 plus, $250. Okay, you should be buying Solana. You should be buying the low risk stuff first. Then once you see that stuff start to get momentum, the way that it works is the money trickles down to the lower cap stuff. And on Solana, that's meme coins. Okay, so if you want to get meme coin exposure, you should be packing money into Solana at this moment. When Solana rallies, when Solana pumps, you can roll some of that into meme coins. Okay, you're not going to care that much. Think about it like this: if you double your money on Solana, and let's say you put a portion of those profits, you put 50% of those profits into meme coins, and let's say you lose some, you win some, whatever, you're not going to really care. It's all profit. It's play money. It's literally play money at that point. So it's not going to matter as much. Now, if you're putting dollars that you work for and you earn into the crypto market, straight, and you lose that money, that's a lot more detrimental. Okay. So what a lot of you guys should be doing right now with this market dip is, before we start to rally up hard, is you guys should be accumulating the safer assets and waiting for those to pump and get momentum, because a lot of these other coins are paired to the blue chips. So until those blue chips rally up, they're not going to do anything. Okay, so what you should do is you should be buying the safer assets right now, waiting for Solana to get a little bit up higher than it is right now. Wait for it to start to get some momentum itself, and then the ecosystem and the meme coins on the Solana network can then rally up, because a lot of them are paired to Solana. Okay, if that makes sense. I hope that makes sense to you guys. You guys should be waiting for the blue chips first. Then you guys, once you guys have allocated, you guys have gotten good positions, you guys should be allocating, and you should be taking and dripping some of those profits into some of the stuff that you guys want to be dealing with at that time, because the crypto market can change very quick. Maybe Solana goes up to $200-$250, and you see another opportunity that's a better opportunity than the one that you're seeing now. Well, then you could put that money in instead, your Solana piggy bank, into those high risk meme coins, right? Think about it like that. Think about, if you have cheap blue chips, think about that like your piggy bank that's going to grow over the year. You can roll some of the profits that you have from the blue chips into the higher risk stuff if that's what you want to do. Okay, but these meme coins and these altcoins, a lot of these are not going to pump. In fact, close to none of them are going to pump until we see some momentum in the blue chips, until we see Bitcoin hitting over $100,000, until we see Ethereum hitting over its previous support levels and resistance levels. Okay, until Solana gets above $200, 200 plus, $250, until we start seeing momentum, these things aren't going to wake up. So there's no point of allocating right now. Risk adjusted, you're better off just buying Solana, and then at that time, when we see the market rallying, you can then reassess and dribble some of that money into higher risk stuff, if that makes sense. Okay. Another way that you guys can solve this problem is only invest with profits that you have. Okay. There's a big difference between putting cash straight into a meme coin and then rolling profits that you already have into the high risk stuff. Okay. So what do I mean by that? I mean, if you bought Solana on that dip previously, when I was yelling at all of you guys to buy, bang it on the table, right? If you guys bought Solana below $130, if you guys bought Solana at 120, 130, 100, whatever it was, 115, I think it hit. Okay. You're in profit right now, right? You're in profit right now. At that point, let's say Solana gets to 250. Let's say Solana gets to 220. You just doubled your money. All right. You doubled your money fairly quickly. Okay. And then you can roll some of those profits. So let's say you had $5,000 into Solana. Okay. And you bought the dip because you were listening to me, right? You bought the dip, you were listening to me, and let's say that doubles. Okay. Now you have $10,000 to Solana. Do you want to roll a couple $1,000s into lower risk plays, say Radium, Jito, some of the other coins that I've been talking about? Yeah, you could do that. There's nothing wrong with that. You could roll some of the profits into the higher risk stuff at that point because you're already in profits on your investment. Okay. That doesn't guarantee that you're going to make money automatically, but that makes it a lot easier. Okay. You roll Solana profits into higher risk stuff. All right. Or let's say you have Doge profits or you have Pepe profits from your meme coin allocation, and let's say you double, triple your money in Pepe. Yeah, you can roll some of those profits. You can roll some of those profits into other meme coins if you want to do that, or you could just sell it into cash, or you can hold the meme coin. All right, you could do whatever you want, but it makes it a lot easier and a lot less stressful if you're investing with profits that you already have. The problem is a lot of people take money from their bank account and they put them right into the meme coins, the higher risk stuff, and then you can lose that money and it's not funneling down correctly the way that it should. Okay. So I hope that makes sense to you guys. I hope what I'm saying makes sense. And I hope that this is valuable in understanding that you guys really need to be putting these coins in their proper context. You guys have to identify, if you're in meme coins, you have to understand the game that you're playing and how to actually implement, if you want to participate, how to properly implement that into your own portfolio to improve your life and not make it so stressful and more likely to make mistakes in the market. Okay. So I hope that helps you guys. All right. I hope that helps. If you guys have any questions about anything that I said, please comment on this video or message me and let me know, and we can talk. Okay. If you guys want to join my Telegram, you guys want to get coached by me, you guys want to get a consultation, you guys got to jump in the Telegram, message me privately on Telegram, and we can talk about that. Okay. You guys want to subscribe. If you guys like this type of crypto content, this in-depth, more personalized crypto content, you guys should subscribe, like this video, save this video, and let other people know that want to get into the crypto market or who you think could get value from this. You guys should let them know and share this video with them. Okay. Instagram, chase your grace. TikTok, chase your grace. Okay. It's been a very busy few weeks, but hang on. We're gonna take this to the next level very, very soon. Okay. Working through some things, dealing with a lot of stuff. But bear with me. And I hope you guys enjoy the content that I've been posting. Okay. I hope you guys have a good day. Thank you and bless up.